Welcome to the Deep Dive, where we unpack your sources to bring you the most important nuggets of knowledge. Today, we're plunging into the, often misunderstood world of Forex trading.
Yeah, and we're guided by some crucial excerpts from Sunil Krutel's insightful book, A Practical System for Trading Forex.
Exactly.
Our mission today, it isn't just about defining terms, it's really to equip you, our listener, with a solid foundational understanding of what Forex trading truly is, how it operates,
All right.
and maybe some initial insights into managing its unique characteristics, especially from Sunil's perspective.
Think of this as your essential shortcut, maybe.
Yeah, exactly. A shortcut to navigating a complex, pretty dynamic financial landscape with hopefully more clarity and confidence. Okay, let's unpack this.
So to start, let's understand the framework we're using here. Sunil, or SK as we'll call him. He's distilled, 22 years of real-world trading experience?
That's right, 22 years into a practical system for trading Forex. And his goal, as he states it, is really to simplify this often daunting topic.
Yeah, it can seem that way.
For sure, and to empower working professionals like you, maybe, who are seeking greater financial independence.
Okay, so it's practical.
Precisely. This isn't just theory. The book lays out Sunil's own very personal trading methodology. It's actually a unique blend of powerful tools like Elliott Wave, WD Gann, and Ichimoku charting principles.
Interesting mix.
It is. And the aim, it's to provide a practical system designed for hopefully consistent double-digit annual returns.
Okay, now you've got my attention. Double-digit returns.
Yeah, and with surprisingly minimal daily effort required from the trader. It's more about smart, focused application, not staring at a screen all day.
That definitely resonates. Consistent double-digit returns with minimal effort. So given that context, for someone listening who's intrigued, what exactly is Forex? And, what's the true scale of this market SK is guiding us through?
Right. Forex, it's short for foreign exchange. It's basically a 247 global marketplace where currencies are bought and sold.
34/7.
Yep. Almost nonstop Monday to Friday. It operates continuously across these things called electronic communication networks, or ECNs. Think of them as just vast electronic trading systems.
Good.
And the scale you asked about, it's truly astronomical.
I'm still trying to wrap my head around that scale. Can you help us really grasp just how massive it is? Maybe put it against markets we know better.
Absolutely. So the latest figures, these are from 2022, reported by the Bank for International Settlements. They show the global Forex market reached a staggering $7.5 trillion.
Trillion with a T.
Per day.
Yeah.
$7.5 trillion daily trading volume. Now, to put that in perspective for you, think about the New York Stock Exchange, the NYSE.
Okay, familiar.
Its total daily traded volume, and that's every single share, Apple, IBM, you name it, plus all the global ETFs, comes in at, a mere $19 billion per day.
Billion versus trillion, wow.
Exactly. That means the entire NYSE's daily volume is just 2.5% of what the Forex market trades in a single day. I mean, the difference is just monumental.
Wow. That really, really drives home the sheer size. It's not just big, it's in a completely different universe.
It really is. And this sheer immense volume is precisely why Forex is often considered kind of a perfect market for trend following, as SK points out.
Perfect market. How so?
Well, there's so much depth, so many participants that trends tend to develop with significant momentum. And they often persist for longer, making them, more identifiable and crucially maybe more predictable for those who know how to read them.
Right. Less jumpy than smaller markets.
Exactly. It's less prone to those sudden erratic movements you might see in, say, thinner markets like small cap stocks.
It definitely sounds like that massive volume creates ideal conditions for trend following. But okay, for someone looking to engage with this perfect market, what are the practicalities? How does one even get started? What are the tools?
That's a crucial first step, absolutely. So trading accounts for Forex are primarily offered on these specialized tech platforms. The most popular are MetaTrader 4, MT4, and its newer version, MetaTrader 5, MT5.
MT4, MT5.
Got it. Think of these not just as websites, but as comprehensive electronic control panels. They're a lot like the brokerage platforms you might use for stocks, ComSec, NabTrade, E-Trade, whatever, but specifically designed for the instant execution of currency trades and showing all the real-time market data. And SK stresses, it's absolutely crucial to spend time learning how to navigate an MT4 platform before you even think about placing your first trade.
Like learning to fly the plane before takeoff.
Exactly. It's your cockpit. You need to know every dial and button.
Okay. And that massive volume we keep talking about, why does that actually matter to me as an individual trader? Beyond just making trends more stable, does it, translate into real benefits on each trade?
Absolutely. It's fundamental. High volume ensures that, fine pricing is always available.
Fine pricing.
Meaning, when you want to buy or sell a currency, you're almost guaranteed to get a fair and competitive price because there are just so many buyers and sellers active at any given moment.
Oh, okay. Liquidity.
Exactly, liquidity. It also keeps the bid-offer spreads reasonable throughout the week. The spread is basically the tiny difference between the price you can buy at and the price you can sell at.
Right, the broker's cut, essentially.
Sort of, yeah. And in highly liquid markets like Forex, these spreads stay tight, which directly benefits you, the trader, by reducing your transaction costs.
I can see how that liquidity would be a huge plus. This reminds me of SK's analogy. He talks about trading these big, high-volume markets. He says it's like navigating a huge ocean liner making a U-turn. It moves slowly, deliberately, gives you plenty of notice, which allows you time to get out or even reverse if things change.
That's a great way to put it.
Whereas he compares trading smaller things like small-cap stocks to being on a tiny boat that could just get swamped and capsize overnight with one big wave.
It's a very vivid and, I think, accurate comparison. It really illustrates that stability that comes with market depth. And speaking of volume, it's fascinating that consistently, something like 90% of all Forex volume is traded against the US dollar.
90%? Wow. Why is that?
It's just because of the dollar's, unparalleled dominance in global trade and finance. Everything's priced in dollars, pretty much.
Right.
And this leads us directly to the major currency pairs, the ones that are most actively traded. We're talking GBP USD, pound dollar, CAN USD, Canadian dollar, US dollar, AUD USD, Aussie US dollar, Euro dollar, JPY USD, Yen dollar, and CHF USD, Swiss franc dollar.
So mostly pairs involving the US dollar.
Exactly. And when trading Forex, SK strongly suggests sticking with these big volume pairs.
Why specifically those?
Because they offer the best liquidity and the tightest spreads we just talked about. It just makes your trading more efficient and potentially more predictable.
Okay, so sticking to the majors is key advice. Now, let's shift gears slightly. Let's talk about something that truly sets Forex apart from, say, stock markets, and it's a concept that, causes both excitement and maybe some fear. Leverage.
Leverage. Yes. It's indeed probably the second biggest difference when you compare Forex to equities. And it's a powerful tool, no doubt, if you understand it and manage it correctly.
How does it work, basically?
It lets you control a large amount of money in the market using a relatively small amount of your own capital. So think of it like this. If you have, say, $1,000 in your trading account,
Good.
A broker might offer you 100-to-1 leverage. That means you can actually control $100,000 worth of currency in the market.
With just $1,000.
Exactly. And this amplification is why even small price movements in Forex, tiny little changes, can translate into significant profits or significant losses for you.
Can you give us a quick concrete example?
Yeah.
Because that amplification sounds intense.
Sure. Let's say you make a profit of US $30 on a trade. In Forex lingo, that's often called 30 pips. A pip is just the smallest standard unit of price movement.
Okay, 30 pips, $30 profit.
Right. Now, if you made that $30 profit on what's called a standard lot, that's $100,000 worth of currency, and you're using that 100-to-1 leverage, your initial invested capital for that $100,000 position might only be $1,000. So that $30 profit relative to your $1,000 capital is actually a 3% return.
Ah, I see. Compared to the capital you put up, it's bigger.
Exactly. Without leverage, needing the full $100,000 to make $30, the return would be, tiny, almost negligible. Leverage amplifies that small dollar amount into a more significant return relative to your invested capital.
So what does this really mean for someone just starting out? It sounds incredibly potent, but also, frankly, a bit intimidating. It feels like the ultimate double-edged sword.
It is precisely a double-edged sword. SK emphasizes this again and again.
I bet it.
While leverage can amplify profits significantly, it just as easily amplifies losses. High returns are certainly possible, yes, but they inherently come with high risk.
So risk management is key.
Paramount. Absolutely essential. This is why SK strongly advises never carrying a leverage of more than, say, 25 times your account equity.
25x max.
Yeah, he's basically saying don't bite off more than you can chew. Don't overextend yourself. The crucial choices a trader makes in managing this risk, like setting stop losses.
What's a stop loss exactly?
It's a predefined price point where you automatically exit a trade if it starts losing money. It's your safety net.
Got it. Cuts your losses.
Right. Setting those stops, deciding how much risk you're willing to take per trade. These decisions are directly influenced by the leverage available and, crucially, your personal risk tolerance. Understanding your own fear level and where you draw that line is maybe one of the most important things for any trader.
That's a powerful point. Knowing your own fear level.
Yeah.
Okay, so Sunil's system, and really most successful trading systems, they rely heavily on various technical indicators, right?
Mm-hmm.
To guide decisions, manage that risk, identify those trends.
Mm-hmm.
We've seen several mentioned in the book. Can you give us just a glimpse into a few of these, maybe how SK uses them?
Yeah, absolutely. SK uses a few core indicators to, read the market and manage risk. For instance, he refers quite a bit to the MPD. Stands for Moving Average Convergence Divergence. It basically measures the relationship between two moving averages of a currency's price. It helps them identify changes in momentum, trend direction.
Okay.
But what's interesting is SK uses MCD not just to see momentum, but specifically to spot divergences from the price action.
Divergences.
That's when the indicator does one thing, maybe goes down, but the price actually goes up, or vice versa. It often signals that a trend might be weakening or about to reverse.
Ah, like an early warning?
Kind of, yeah. It's one of his early warning systems.
So it's not just about what the lines are doing, but how they relate to the actual price. What about other indicators?
Exactly.
Wow.
He also incorporates the parabolic SAR, often just called SAR, stands for stop and reverse.
Stop and reverse.
Okay. It's a trailing stop method that shows up as dots on the chart, either above or below the price bars. SK uses it quite effectively to identify the current trend direction and potential reversal points. It helps him know when to stay in a trade, maybe when to tighten his stop loss, or even when to consider getting out or reversing his position. It's very visual for tracking trends.
That sounds like a useful visual cue.
Yeah.
Any others he really relies on?
Yes. He also includes Williams per SAR. That's a momentum oscillator.
Williams per SAR.
It helps him quickly assess if a currency pair is trading near the high or the low of its recent range. So basically identifying potential overbought or oversold conditions. Maybe before they become obvious to everyone else.
Getting ahead of the curve.
Potentially, yeah. And he relies heavily on something called the Chiku span. This is a key part of the Ichimoku system.
Chiku span. Sounds Japanese.
It is part of Ichimoku. What's brilliant about the Chiku span is its simplicity. It's literally just the current price plotted, say, 26 periods back in time on the chart.
Plotted backwards. Why?
It allows him to instantly see how the current price compares to historical price action. Is the market trending up or down? Is the current price running into strong resistance or support levels from the past? It's a very quick visual confirmation tool.
Interesting. A simple look back for context.
Exactly, without needing complex calculations.
These are just a few of the indicators Sunil details, right? We've really only scratched the surface today.
Oh, absolutely. And as you noted, his book provides the really comprehensive details, the specific settings he uses, which are critical, and lots of visual examples needed to truly grasp these tools and how they work together in his system.
Okay, so we've covered quite a bit in this deep dive. We looked at the core purpose of Sunil Kuchal's practical system. We tried to grasp the, astonishing scale of the Forex market.
Yeah, that's 7.5 trillion.
Right. The crucial role of brokers and platforms like MT4, the importance of trading those major currency pairs with high volume, and that powerful but definitely risky aspect of leverage.
Mm-hmm.
We even had a quick peek at some of the key indicators SK uses to navigate it all.
And if we try to connect this to the bigger picture, hopefully you've gained some valuable insight into how knowledge is really most valuable when it's understood and applied in real-world scenarios like trading.
Right.
But it also raises, I think, an important question for you, the listener. We know that in trading, perhaps the only thing we truly control is setting our stop loss, right? Acknowledging that markets can be unpredictable, they can move against us.
Definitely.
So given that reality, how do you plan to balance the exciting pursuit of profit with the absolutely crucial need for self-protection? Where will you define your personal fear level line, not just maybe in financial endeavors, but in any risk you choose to take in life? Something to think about.
That's a great question to ponder. And for a more comprehensive understanding, to really dive deeper into Sneal's system, the indicators, the examples, remember this deep dive is probably best heard alongside his book, A Practical System for Trading Forex. That's where all these concepts, and a lot more, are explained in rich detail with those vital visual examples.
Absolutely. The book provides the full context.
Until next time, keep learning, keep exploring, and keep making those informed decisions.